Welcome back, everybody, to Be the Trader. Today, I have a very special guest. A lot of you guys know him on Twitter, and if you don't know him, you need to follow him. I got your boy Harry Haas here today. Harry, welcome back, my man. How you doing?
Yeah, I'm doing pretty good, man. Pretty good.
Good, good. Well, look, man, it's been a while since you and I have connected and caught up. So let's just get this started. We've had you on the show a couple of times when it comes to the trader therapy sessions with multiple traders and just kind of discussing previous trades and how we're doing
Yeah,
and challenges. But I kind of want to talk about Harry today and kind of get to know the man behind the man, right? And
yeah,
if you
yeah,
could start off, I know people probably already know your background, so if you can give us just a quick idea of what got you into trading in a short version, and then we'll go
yeah,
from
yeah.
there.
Yeah, so basically, like 4 or 5 years ago, I know I'm only like 21 now, but like 4 or 5 years ago, um, I got like a really bad concussion. I was basically living in my grandparents' basement for like a year, and like I didn't go to school. I didn't do anything. So I was just pretty much trapped inside the basement, and I mean, I did have some friends coming to see me, but like I didn't have a lot of people coming to see me because like I needed to be in a dark room all the time. And I was like, you know what? I want to get rich. Like, screw it. Like, I just basically like all those thoughts kind of come to mind. And basically like I just started like just like watching some like free YouTube videos. I started watching just like a lot of stuff. There was no necessarily like particular like guru. Like I remember like I think I was following like Bao and Alex at the time. I'm not sure about Alex, but I knew I was following like Bao at the time. Um, and I was just basically picking up on all the information I could. So when I first started trading, I started like kind of like longing OTC stocks like a little bit. And like I didn't really find like necessarily like a lot of success. Mind you, I'm in like grade 11 here, and like I'm from Canada, so like you can't really open up like a brokerage account, like a brokerage account. Like you can open up like a brokerage account, but I got my dad to open me up like a TD like investing kind of brokerage account. And I was like, Dad, like I need you to help me out here. So I had like a little bit of money, so like I just kind of like threw it in there, lost it all. But it was like I am happy like with like how that kind of turned out because it really kind of gave me some experience. And I mean, I was like kind of longing like penny stocks and like shitty companies, but then I kind of started like just kind of like developing like a little bit of a like swing strategy with like longing. It doesn't really work anymore in kind of the OTC market, but that was like kind of where I was going. And then I kind of got into Nasdaq shorting, and that was more so like 3.5, 4 years ago. And that was where I really kind of started to find success on some of like the faders with like a lot of excess supply. So I'd never touch a day one low float, and I'd never touch anything kind of on the front side. That was like kind of my motto. That was what I always wanted to stick to because I basically like looked at all the charts and said to myself like, okay, if it has a really low float and it's kind of in the uptrend position, I don't want to be shorting it. Like it makes no sense to make a bet on a stock going down. If you're going to try and short something on the upside. And I never really understood why people kind of did stuff like that. So basically what I would wait for is like the second time kind of stock would gap up after a really big run, and then I'd kind of short into like a morning pop, or like I'd even sometimes start pre-market, and I kind of found like a bit of success doing that. But when I really started to make like money, I'd say was probably like 2.5 years ago, where I started really getting into Nasdaq longs. That was like I was almost obsessed with getting into Nasdaq longing. Like I was like pretty much I was pretty driven because I was like, you know what, screw all these short sellers. Like I knew I used to be a short seller. And like I'd be shorting like as I was kind of like learning the long situation, because I mean you don't just go from like shorting to longing. But I was like, you know what, screw these. I want to squeeze them so bad. Like I want to friggin' make money on the front side, and kind of like it brings like, and then I learned like the first bounce strategy with Bao, and like I mean that pattern was really hot like a year ago. And I was still kind of shorting almost like a year and a half, 2 years ago, I guess. like somewhere kind of in around that range. Like I remember switching like maybe like a year and a half ago I switched over, and like that was probably like the most like consistent time, like going from like shorting to longing, because I had like kind of memorized that strategy so much, and I had been like kind of practicing it like beforehand, so I kind of knew what to expect. And basically this summer was like, I mean, it wasn't an amazing summer. It was a pretty slow summer. I think it was for a lot of people. And like there wasn't really many good tickers to long, and there wasn't really many good tickers to short either. Like it was kind of like no man's land in a lot of these tickers. But it gave me a lot of time to develop, to watch the tape, to look at different resistance and support levels, to really go over practicing my process. It gave me a lot of time to focus on myself. It gave me a lot of time to focus on trading. It gave me a lot of time to kind of focus on my relationships with other people, kind of evaluate my life. Like I really had a really good summer kind of in that way where, I really like kind of just got to like know myself again, because for the last like 3 years, I had just been sitting and trading and grinding and, like all the like hustle mentality and all the, you gotta make money, like, no breaks, like don't hang out with anyone, you don't go out and party, but I really relaxed this summer and said, listen, I'm consistent now. Like there's no reason why I need to be still focusing so hard and giving up a lot of and giving up a lot of like things that I don't want to regret later in my life, because I'm still young. I'm 20. And so it's really awesome, So I don't want to just throw away those years, and I don't want to, I don't know. I don't want to regret anything.
Yeah.
Because I mean, you can have, I guess the way I look at it, like you can have like all the money in the world, but you can still be depressed. You can still be like have a lot of anxiety. You can still, there's a lot of like kind of like negative things that can also happen too. And I guess what I thought was that when I become when I become consistent and when I become successful, all my problems are going to go away. Every single issue in my life is going to go away. I'm never going to feel any emotions. I'm going to be happy all the time, all that instant gratification, green on the screen. I'm happy. But there's a lot of things and pressures that come with being consistent, and a lot of discipline issues that come with being consistent. And I mean, we can get into that later if you want, but I mean, so I've been like living a little too. I've been spending some time with my friends. I've been enjoying my life, but I've also tried to maintain a very disciplined lifestyle of kind of like, no drinking on the weekdays and, no partying, like business throughout the week. But the weekends, aside from weekend mentoring, and I do grind a little bit on the weekends still too, but I really try and, have a schedule to live a more kind of balanced life than I was, let's say, last year at university when all I was doing was classes in the morning, trading in the morning, classes at night, grinding on the classes at night, grinding on the trading at night, trying to find time to read the tape, also trying to find time with my friends, which was very little. And my friends at university would text me and say, hey man, like we haven't seen you at all. I'm like, man, I've been working on this Nasdaq long strategy. I've been working on this, shorting thing. I've been working on supply and demand. I've been working on spreadsheets, all these different things. And, it's crazy because if you look back on everything I've worked on in the past, like, I don't know, 4 years, like starting from like the all-day fader kind of strategy with like a lot of excess supply, and now coming to like the Nasdaq longs, like my trading has got a hell of a lot simpler compared to what I thought, it needed, because, like 3 years ago, it's like, oh, the volume forecast and oh, the supply and oh, the excess this and the excess that. But now I really just long off, resistance and support. It sounds so terrible, but it's really the only thing that I found that's really stuck with my trading. Where this morning, I mean, me and Bauer in the room, and me and Bauer both saying like, I'm like, yeah, I'm looking at like 870 area. He's like, oh shit, I'm looking at that area too. And then of course we get a bounce off 870. And, it's crazy because there's really no spreadsheet, no magic formula. It's not like it's a, quote, A plus setup. It's not like I'm sizing in, like a super big amount. It's just like, yeah, we both kind of saw the 870 line. I know some people saw it too as well. And I'm like, when I make a call like that, like I don't try and make calls like every day like that. But if I do see something like a really nice setup, like kind of like it was today, I'm just going to go in and I'll say like, hey, like I'm looking at this. Does anyone else kind of see this too? Just kind of for the process and like kind of for like more so the education rather than saying like, I hope everyone banked too,
Yeah.
But yeah. So that's basically brings me to where I am now. I mean, I just basically read the tape and just look at, resistance and support levels, and that's, pretty much it. So it's
Yeah.
been kind of a wild journey going from like kind of like OTC pink sheets into short selling into longing now where I am now. And it's crazy when I look at, when in the spreadsheet or in the shorting days, I was all about, spreadsheets and all about data. And anyone that knew me knew that I was so persistent on, do they have an ATM? Do they have a shelf? Do they have excess supply, bag holders? What's their cash burn rate? Are they going to need to dilute? All these things when I was shorting, I was paying attention to. I would go into these companies. I would, in the mornings in pre-market, I would find everything out about maybe like 2 or 3 companies that gapped up. Well, their cash burn rate is so bad, so they need to dilute. They have no choice. And I would make money, but I was a little bit too over convicted. But I like where I am now, where I'm like, listen, I can get dumped on. I understand that there is a lot of dilution, but that doesn't matter to me because, if I'm reading the tape on, kind of resistance and support and I see that the line's holding, I'm just going to take some now. And if I see a lot of selling at a particular resistance level, no bias here, I'm just going to get out and I'll see how it goes, the next line around, or maybe it goes a little bit higher, maybe I sell half here. So it's turned into more of kind of like an art form for me rather than necessarily a science. And this is a day 2 ticker, so I have an 80% odds of just shorting at the open, hoping for a fade all day. It's not really like that anymore. Now it's like, okay, I'm looking at 10 line. Is there a lot of selling into 10? To kind of like if I was a short seller, like I go from the short to long mentality all the time. Like me and James Freelander, we text every morning, and he's like, "What's your kind of plan on this setup?" And today I was like, "Oh well, I think a 140 dip could be really nice, and then we get a pop." And of course, I missed the trade because I'm focusing on another one, but we get a 140 dip, and then we get a pop, and he's like, "Holy shit," But this is kind of what we do, where I'm like, "Yeah, James, how good are the locates this morning?" And James is like, "Oh, well, they're pretty easy to borrow here, and they're pretty hard to borrow here," But we're just like, we have a lot of fun with it. And I call James my lab, my locate accountability buddy. Because like we'll always kind of text each other and make a plan. And if it weren't for MIC, I definitely wouldn't have got to know him and, got to meet him. But yeah, like it's just kind of stuff like that where like I really do like the kind of community to it and kind of where I've been, where I'm at now. But yeah, that's like pretty much it.
So let me that's a lot you gave me. So I do want to go back to the beginning though of what you said, and that was during the summer you really took some time for yourself to kind of really just take a break and figure out who you are. And I'm curious, like after that happened and you came back to trading, what did you notice and how did you feel? Did you see a difference or not really, or just just curious?
Yeah, no, I definitely did. I'd say like I was trading every day, but there'd be times where like I remember the Stanley Cup came to like a town that was close to me that day. And there wasn't really anything going on in the market. My mom was like, "Yeah, I think we're going to see like the Stanley Cup today. Like, do you want to come?" And I just said to myself, "You know what? I can. Like, I have money in the bank. I'm fine. I can walk away right now and I can come back tomorrow. There's not even some great opportunities today. So like, why does it matter?" And that's what I did. I just went out and left. And I remember driving there thinking like, holy shit, I can't believe I just did that. I can't believe I just left on a weekday. Like these are like bread and butter days, But, in the fall, in kind of like the winter, like in the fall when I came back, like I was still working. But I just found that I was just so relaxed and not trying to force things every day and just not trying to be someone like who I was like who I wasn't, you know? And I would just say to myself, like I still do every single day, like, you know, there's no need for me to go out and try and be a hero today. Like I just need to catch the first 3 or 4 or sometimes 5 predictable bounces on the front side, and that's it. That's all I need to do. That's my main goal. I don't need to sit here and trade till 3:30, 4 o'clock, and have all my mental capital drained and be exhausted, you know. And maybe, yeah, maybe I could sit there and, you know, sit there and tinker and scalp all damn day. But there's a real big risk to that, I find, because when I leave in the morning at noon or 11 o'clock or whatever time it is, I'm just so still mentally refreshed. You know, I don't need to take a nap. I can go to the gym and I can go work out, or I can go for a walk, or, you know, I could even go for a dinner with my friend, or I could have a beer. You know, I'm not so mentally drained where when I leave the computer at the end of the day, you know, I need to take a nap or I need to take a whatever, because I've just said to myself, like, I'm just going to trade like as less as I can. And it's funny when I say to myself, like, I need to trade, you know, less, like people are like, holy shit, like, you know, you must be a piker, you know. But sometimes I'm getting like you know, I'm, you know, getting a 30-40 cent a share gain on some of those trades. And you know, it's like, okay, so you're up 30, 40, 50 cents in a trading day. Like, do you really need to keep trading anymore? And that was something that I really struggled with, where I was like, you know, but it's only, you know, 9:35 and I'm already up so much. Like I got to keep trading. And in reality, no. Like you can walk away. Like if like I try not to have a quota now. I try not to have I need to make this many trades a day. I try not, like, I literally do the same thing every day now, and it's wonderful. And basically what that is like my trading strategy now is just pretty simple. Like in the morning, like I'm awake at 7 o'clock market time. Like that, I'm awake, I'm ready. Like I've already taken a shower, I brushed my teeth. There's nothing that I need to do. There should be no excuses for me at that time. And basically from 7 to kind of 8 o'clock, like I look for something that's kind of uptrending, and I might take a dip on it, or I might see something and just say, you know what, I'm gonna wait for the open. And that always kind of keeps me sane, to say to myself, you know what, I don't need to necessarily to have FOMO already at 7 o'clock. I can just wait for the open. So that's what I do. I usually set some kind of fantasy orders on the dips. Sometimes they get filled, sometimes they don't. That's okay with me. And that type of mindset, that type of mentality has made me so much more successful the last 6, 7, 8 months, by saying to myself, you know what? These are the lines. This is what hit. There'll be sometimes when I miss a cent and I'm like, well, you know what? I was right anyway. So who the hell cares? And and that type of mentality has helped me so much. So anyway, from kind of 7 to 8 o'clock, I'll kind of catch kind of the front side in the morning as some of these movers. Sometimes I don't. Sometimes I do. It's not really a big deal if I don't get it. You know, sometimes they'll dip for like a small teensy second and then keep going. Other times they'll dip kind of down into a line. So there's other times they'll bounce off VWAP. So you never really know. It's kind of like an art again, where it's like, okay, I'll just set some orders out, see what gets filled, see what doesn't. Then usually from kind of that like 8:30 area to 9:30, I never trade, almost never, unless there's something that is gapped, like let's say at 9 o'clock with like fresh news that has kind of done something similar to like, you know, a company at 7 o'clock. Because what you see is like a lot of these 7 o'clock companies, you know, they have a pump, they go up on the front side and then it's kind of backside for a little bit. So it's like, okay, if it's going to be backside anyway, you know, why am I going to trade it? And that's kind of sometimes when me and James are texting, I'm like, yo, this stock's having trouble with VWAP. Like, do you notice that? And he's like, yeah, bro, I've been seeing that too. And like, maybe he'll like take some short, even though he's like with his tab, he's not supposed to like trade pre-market. But I'm like, bro, I'm done trading. So like, that's kind of the green light for you almost. You know, obviously with some risk management, like you need risk management. There's stops. There's going to be sometimes I get stopped out and it keeps going. It's going to be sometimes where I sell too early, sell too high, whatever, all that good stuff in trading. But, you know, from that time frame, I don't really trade. And then from 9 o'clock, I just basically draw my support and resistance lines, trade off those lines. You know, if I have a really great day, you know, that's good. My risk management, I try and keep on point so much, because I know that the one time where I could be wrong, it could give away some profits or give away. Like I'm usually cushioned enough from those 7 o'clock trades where I try not to play the cushion game where I'm like, oh, well, you're already up this much, so you can afford to lose this much. But it's like, no, never think like that. Trust me. Happened to me before where I have a ton of 7 o'clock games and then lose, So it's really important, like, where I'm just kind of trading the lines. And again, sometimes I'll get filled, sometimes I don't. Sometimes, I'm going to be like, holy shit, like this stock just ran from $1.80 to 2 whatever. And, I missed by a penny, that sucks. It's like, no, I know that I can get a backside bounce on something like that. So it's okay. I don't freak out if I miss the initial big front side of a move. And then, yeah, that's like really pretty much it. That's
So
like basically.
So let's because one thing that you said too is a lot of people probably notice you after you join, like after you've been like, I didn't notice you until you found your first bounce, right? That's when I noticed you, right? And so it's good that you shared this at the beginning too, when you mentioned, I mean, you've been doing this for 4 years.
Yeah.
At first you were a short seller, and then you were really focused on, you mentioned all the different strategies, right? All that you were doing.
Yeah.
And in that whole time period, you were finding your success. Then you finally found it in that one short selling kind of strategy, and then you went into the longs. And so what's crazy is a lot of people might not see you until you got into the longs, or maybe they saw you at the beginning. Wherever they saw you at, their perspective is from there. So what's interesting is that if now that you have the full perspective, what I see is someone who has 4 years experience of seeing the market. And so because you've had that experience and because you've tried so many things, right? You've tried short selling, you tried different strategies, you tried OTC longs, you tried swinging longs, and you found some success every now and then. But then over time, yes, you found what you're really good at, but you also, I think it's worth saying that it's because of all of that experience. It's like a combination of all of that, and you find what you're good at. Because a lot of people just see that, hey, everyone, at least if you don't know Harry, you follow Harry, look him up on my other episodes, and he's been interviewed by Beyond the PDT. But what I'll say is, a lot of people, if you follow him, know that he's always like trade the tape. Everyone knows you as a tape reader, right? That's what they know you as, right?
Yeah.
And we're not going to go all into that, but what I do want to say is, people think you just learned that over like a month or two, right? They literally think, oh, what do you mean, Harry? I'm looking at the tape. I don't see it. But what they don't realize is you've been, whether you believe it or not, you've been looking at the damn tape for 4 years.
Exactly.
And now you've been like really focused on it in the past, like whatever. But the fact that you've been seeing it, even if you weren't focused, the fact that you were seeing it for 4 years, you've picked up some things when you started really focusing. You're like, oh, I see these things happen.
Yeah.
And I think that's a huge thing to be said, because people may just see you at the end, right? Oh, he's successful, he's doing well, and this is how he does it. If he could do it, I could do it. Well, what you don't know is it took a lot of work. So I appreciate you sharing that. But the one question I have for you is you mentioned that it's more of an art versus a science now, which I really love, because I'm starting to feel that way too, and I love that. And so, but what I also love is that my question is, if it's more of an art for you now, and you went from complicated to more simple, you're reading the tape at key levels, which is very important. I think a lot of people miss that. A lot of people think it's just reading the tape. Oh, there's heavy selling here, short, or there's big buyers here, buy. That's the worst way to do it. But at key levels. But then you also mentioned, like, you wait to see the tape, confirm, and then you go. But then you also do fishing orders. And for those of you guys who don't know what a fishing order is when you place an order at a key area or wherever you think is a key area, and that you hope to get that price because that's the best price. And so my question is, when you press fishing orders, isn't that kind of contradicting what you were saying earlier in terms of like, I wait for the tape?
I think that's a good question. Like, I wanted to kind of talk about this today too. Like, so I'm really happy that you asked. And so there's different types of trading that I do. And sometimes it's important to also mention like it's really different on like different setups, but like to kind of, let's say like I always like kind of place an order like at the, like, At places where, like, when you've been doing it long enough, there's places where you have like a higher probability than others, and it's like whether I read the tape here or not, I'm probably going to take it anyway. So there's also something to kind of be said for stuff like that. But also kind of like it's like when I use VWAP, like I try and like determine on like how high or like kind of how overextended the stock is or how low it is, like can it be saved, like, or is it too high, like is it in need of a pullback and a bounce. And that I kind of do the same thing with fishing orders where I'll set it at kind of the lowest line, and I know that this is like the absolute best price that I could get filled at, and this is the absolute best price. So even though, like, yeah, I'm reading the tape, and there are other times where like your brain won't be able to process reading the tape in that amount of time, like no matter whether you want to or not. So there's sometimes like today there was a fishing order. I forget the stock. It was like Apron, something like that, or whatever.
Yeah, APRN.
Yeah, APRN.
Blue Apron. Blue Apron.
Yeah, Blue Apron. Yeah, that one. That's a fishing order at the open, and that's hard for a lot of people to kind of get their head around. I know, like, it's really hard because you're like, oh shit, what if it goes lower? Or, oh shit, what if it goes higher? It's like, that's just the game. That's your own mind kind of psyching you out. If you've made a plan before the open saying this is where I want to buy, this is where you're buying, and this is where your risk is, there shouldn't be any type of there shouldn't be any type of uncertainty there at all. And so for me, there are going to be times where I am using those fantasy orders and the fishing orders and the stuff like that. But there are also going to be times where, it's also kind of reactive trading where, like, I've drawn a line at, let's say, 1.8 and it's a support, and I see a lot of support there and I see some buying at 1.8. I'm going to take some at 1.8 because I see it, And so it's kind of the see it and buy it. It's like more so if, I have a sell target at 210, but at $2, I notice it's really heavy and, there's some sellers. I'm probably going to take it off at $2 because it's like, oh shit, well, there is a $2 line there as well. So I'm just going to, take it off into that because, it may never get to 210. And so that's something that, it's important to say is that, like, yeah, my main fantasy orders are here, but if it's having trouble breaking a line before it gets to that point, that's when I'll take some. Or if it's having trouble. And so that's kind of what I try and do, where it's like, yeah, you can preset your entry for here and preset your exit for here. But sometimes there is going to be like lines in the middle that you need to pay attention to as well. That, okay, it's like, okay, well, maybe... like, it's like, I'm going to go, like, if it breaks this one, I know I'm going to sell it this one, so I'll preset my order there. But and so that's something to really, really, really take into account and take notice of, is that there are going to be times where, you're trying to buy at 1.6, but maybe, the line above it at 1.7 is kind of really holding. Or there might be two lines, stacked on top of each other. It's just more so really depending on the setup. I mean, if there's one line and that's the only damn line, then it's like, yeah, I'll probably read the tape on it because it's like, okay, But if maybe there's two lines, maybe I'll scale in depending on, the float size and depending on how it's trading at the open and depending on a whole lot of factors, the volume. If it has a really weak open and no one's buying or selling the stock, I mean, who wants to buy that, So it's really just a lot of stuff like that. So yeah, sometimes I will set a fantasy. Other times it's going to be reactive. Sometimes you need to adjust your plan on the fly. But I'd say I'd be careful with that as well, because you may get into more of the emotional things and you may be like, oh, I should have stuck to my plan. And so it's more on the intermediate to kind of, I don't like to say expert. I never like to say expert. I like to say I'm an intermediate trader. Like, I'll let experts be the experts, I'm an intermediate. I like it there. That's where I'm going to be my entire life.
So I think, so two things is, number one is the fact that I think it just depends on, what kind of support there really is, really. And I think that, I know without, obviously that depends on the strategy, but then also I think the key is, and you correct me if I'm wrong, are you really meaning, is it more of, obviously there might be some heavy volume there that was shown previously that it couldn't break that key level, so that's a stronger level than the level above it that didn't never really been tested with volume, but it's been tested.
Yeah, like I mean, I try not to again, I try not to be too scientific. Like, if there's support at 1.4 and it's doing no volume, I'm probably still going to look at 1.4 because that was the support and that was the level that it kind of bounced off of. So I try not to be because that's again when you can get yourself tied up. It's like, oh, well, yesterday on CANF, it did 50K down here. This one did 20K. This one didn't do anything at all. So there's so many where I'll just keep like if I thought like that would fuck me almost because
okay, no, that's a good point. That's a really good point. So are you saying really, and this is the only way I can think of it, and you let me know if I'm understanding. Let's say there's normally more than one key area, right? In any trade, whether I'm shorting, I'm a short seller, so that's
exactly.
So in a long sell, a long buy, there's different areas. So let's say there's 3 areas. Let's say $1. Let's just use $1, right? So $1, $1.10, $1.20, right? And it's at $1.50 right now, and it's about to come down a little bit to those key areas, right? Would it be safe to say to interpret what you mean is when it gets to $1.20 and it shows some kind of, maybe it doesn't show many bids or maybe it doesn't show good tape like what you're looking for, right? We won't get into the details of that. And then it breaks 120 and then it shows something that you're looking for 110. Maybe you'll take a stab at it, but risking off of the one because the one's from your perspective a stronger area for you at that point, or is it more of okay?
But like, let's say I have like 3 lines just like that in that scenario, because sometimes that can happen to me. It's like, okay, like then I'm going back to like how strong are these lines and what are like multiple factors that I can remember from watching this how it traded before. So it might be that instead of walking away when something's spiking and saying, oh, well, this is a good time to take a water or this is a good time to take a break because I know that it's going to be a little bit of time to go down, I really try and analyze. It's like, I know I'm not going to try and take a trade here, but I'm going to remember for later to give me an edge on most people. So let's say it's coming up the curve and, it's at 110 now and it goes down to $1 and immediately shoots back up. I'm going to have more conviction on the dollar area. And let's say it blows through 120. There's a quote line at 120 as like kind of the previous high. I'm going to have more conviction on that dollar area than I am at the 110 or the 120 because I remember from previously before that $1 was a really key area for this stock. So when it comes down to $1, and then I'm gonna sell into a bounce, maybe 120, 130, or maybe 110. Let's say 110. I remember that previous kind of like 110 somehow, and 110 is a lot of green print showing 100 on the ask, and I'll take some off at like 109 and just say, you know what, that's it, like. Nice trade, 10-cent bounce, not going to complain about it, and that's kind of it. But it's like all these like multiple things.
Yeah. What's cool is that you really are more, like when you say it's more of an art, it's like you've truly now are in the mode of accepting what the market gives you. And
yeah, exactly.
Like you don't care if it's 5 cents, 20, 50, as long if it shows you reasons to get out. Then you're taking your money. And then if it shows you reasons to stay, then you're staying in. And and I think that's important because now I think you're evolving to where you're now just strictly trading the actual price action. And I think that tape reading really is huge with that. And I think it helps a ton because it can guide you, right? It may not be, it's not the all be all, but it can guide you. And
for sure.
But I'm sure there's a lot of, and before we wrap this up, I'm sure there's some, and this is my last question, there's some instances where, especially when you're trading that way, where you definitely probably get out too soon a lot of times too.
Yeah.
How do you deal with that? Because for some people out there, that could be their Achilles heel that they don't really know it is. They just think, oh, I made money, but then later on they make another trade because of emotions because they should have made more, How do you get over that and not let that affect you?
Okay, so if it is a part of my plan to get out at like that level, and I do see like let's just say theoretically, let's say I see like sellers on the tape. Let's say my plan is
two levels. Let's say there's 2 levels, and you want the second level, but there's a third. This is the first level, right?
Yeah, and I see the first level's heavy. I have no problem. It really depends on like the type of move, I guess. But I mean, on a backside trade like that, I will never be upset at myself for something like that because I know that 9 times out of 10, that first level, like think of it. I try not to think of it like, oh, I missed out. I try and think of it like, oh, well, Harry, remember the last time when you saw sellers there and you were like kind of like a greedy pig and then you ended up selling for a loss because you were like, oh, yeah, yeah, that's how I think of it because it's like, oh, remember the last time when there were sellers up here? What happened? Oh, yeah, you got dumped on afterward. So that's what's in the back of my mind rather than like, oh, well, I missed out on the extra. I know I can get the extra 10 cents back tomorrow, but if I have to get the extra 20 cents back because I took an L, that is really going to piss me off.
That's a good point. And I think it just always leads back to the difference between a new trader coming into the game and the difference between someone who's experienced 4 years of the game. And I think it's so valuable right there. So I can't wait to share this with a lot of people because I think they're going to see that this is Harry Haas 4 years experience, right?
Yeah.
He took the time because it takes time in this game. And some people do not see that. So I appreciate you being here today and sharing that. And if you could share real quick before we end this, what is the best way for people to reach you? Because I know you by Harry Haas, but I know your Twitter handle is different.
Yeah, I have Twitter. It's at SniperTrader21. I have Instagram. It's at Harry_Haas. That's pretty much it. I answer all my DMs, so there shouldn't be anyone. Even right now, if you're listening to this episode, I should have 0 unanswered DMs. So,
awesome. Awesome. Well, Harry, look, man, I really appreciate you giving me some time today and joining me on the show, man. I really do. So take care.
Yeah, all right. See ya.